Afternoon. Hi, everyone. Today, we are going to talk about how to successfully trade support and resistance level. I'm happy that you'll be here and that we can talk about the following questions and introduction to support and resistance levels, different support and resistance level strategies, and which indicators are useful in support and resistance trading, and some signs for breaking through such levels. It would be a great pleasure if you make sure that you stay online until the end of this webinar or the video, if you watch it on YouTube later, when I'll be showing you how you can work with support and resistance strategies very successfully. My name, ladies and gentlemen, is Marcus Gabel. I'm a professional trader, speaker, mentor, coach, and of course, I'm a real trader. And I've been trading the global markets for over 22 years right now. And if you want to have more information about me or about myself or my trading approach, watch this homepage or send me an email if you want. The English part, tradingandpersonality.com, is under construction and will be published since the next days. So in this webinar series, Trading Spotlight, I'm partnering with Admiral Markets, which is a Forex and CFD broker that offers trading on over 8,000 different financial instruments through one of the world's best trading platforms, MetaTrader 5. Finally, if you're watching this on YouTube, remember to like this video, share it with other traders, and subscribe so you will never miss an episode. I'm really happy that you'll be a part of this webinar this afternoon on Monday. It's a little bit unusual that I make this webinar, but I hope you will pay attention for me as well, like Paul. Paul is normally the part on Monday. So let's talk about a little bit introduction of support and resistance. What does it mean if we talk about support and resistance? First of all, we are familiar with the words support and resistance. And you know it from your life. If someone is supporting you, your kids, your partner, your wife, your girlfriend, or your boyfriend, or whatever, you will feel good and comfortable because the people are loving you. They're supporting you wherever they can. But if someone is resisting you, it feels bad and you feel upset because it's like a fight, and one word is against the other words, and it's always a bad thing if you feel resistance. But if you feel like that, you can compare it with support and resistance in trading, because they are also well known in trading. And let's see, how do they work? Resistance and support. The meaning of support and resistance in trading is really similar like in normal life, support and resistance. In trading, support is a lower price level that the asset price keeps bouncing against. So you can see it on the lower arrows and the blue or lila colors here on the lower side, and it doesn't go below this special level. The more time the asset spends above this level, the stronger the level of this support is. So this is a picture, you can see it in the screen on the left side. On the lower side, that was a couple of times that the price to start some examples and some shots or tried very often to break through, but it didn't happen. So this means that there are a lot of buyers there. They avoid that the price will break through this level. And you can see it always in the chart, the more time the price spends at such a level, you can see the more buyers come into the market, and then the price will go up again. On the other side, resistance is like a ceiling over an asset and special assets price that your trade cannot break through to the upper side. And as a trader, and maybe you are long, you have an open long position, that means that you don't feel good because maybe you might even be a little scared or confused why the price won't get up or won't break up this special ceiling, glass ceiling. You can see through this glass ceiling and you can see a lot of hue, a lot of distance and a lot of space on the upper side, but the price won't go up and won't break up to the upper side. This is like a resistance. And if you have a long position and you can see, maybe as a beginner or an unexperienced trader, you cannot understand what happened here right now, why it won't go up anymore. And it's just a little bit confused. And why, when I made this experience in the past, I felt a little bit scared because I couldn't know and I didn't know what I have to do right now. Should I trail my stop, or should I close the position, or should I wait until the price will go up or won't go up? What should I do? Just a little bit scared at that time and made this experience very, very often. So, and at the moment, just a little bit in between, you know, I'm a German guy and my English as well, but I hope you understand me in the right way and they can understand what I try to explain. So this is my private mission and this is my private intention. Everything what I do here is that I can support you, that I can help you, that you become successful in trading. Because in my private opinion, over more than 22 years right now in experience, I think everybody has the right and the opportunity to become successful in trading. And it's the part of Paul Jens and myself, and thanks God, Admiral Markets, that we can support you on that way, that we can encourage you, that you become successful in trading. And this is like this is like the meaning of supporting and support of you. And if we won't tell you the truth about trading, it's like a resistance, and you cannot become successful in trading if you have resistance in your life and in trading. So this is the meaning of basically introduction of support and resistance. So let's go. Are they really useful? This is an interesting question we have to talk about. Are they really useful for your trading? Of course, as long as you know what they are, how they were created and what happens at this special price levels or areas, then I have to say, yes, you can. Yes, you can. You can trade them really successful and they are really useful. So let's talk about how they were created. And to be honest, the answer is really as easy as possible because there is a large numbers of orders in the book map. In the early stage of my trading career, when a price increased or decreased, I always were sitting in front of my screen and I always asked myself, why? Why is the price actually increasing or actually decreasing? Why is the price doing that, what I can see in the chart? Too late, a couple of years later, I understand how the market is working. And I stopped asking myself, why is the price increasing? Or why decreases the price right now? Or decreased in the past? Why? I always try to figure out by the reason. Today I know there's only one reason. Only one reason at all. And always, of course. It's about the price. The price increases because you have more buyers than sellers. And the price is decreasing because you have more sellers than buyers. The why behind that, the why people buying or selling is, of course, not interesting for you. And it's not a benefit for you. There is no advantage for you if you can know why people want to buy. If they need money, if they see a trend line there, or whatever, by whatever reason, don't care about that, because it doesn't matter why. It is only by one fact: people want to buy or people want to sell. And the price increases because you have more buyers or more sellers, then the price will increase into the lower side. And now, if you think it through correctly, and you can understand the behavior of the price at a resist, like the ceiling, or a support. Because at such special areas, support and resistance, it's like so-called a meeting point for many of the traders with their orders. So if you have the resist on the upper side, then you have more sellers there. You don't have enough buyers. If you would have enough buyers, the price would be break up, but it doesn't. You have more sellers, the price is rejected at this special point and rebounds there, and it falls down from this resist. On the lower side, you have the support. And as long as the price stays there or holds there, you can imagine that there are more buyers come into the market. The reason why is not important, because you cannot find an answer of every single trader he wants to buy there. It's just only a question of probabilities. But you can imagine there is like a meeting point. If you have a normal job and you have a meeting with your colleagues or other people, this is like a meeting point. A lot of people comes there talking about there, and maybe they are going into the same direction, but it's like a meeting point. And support and resist is just like the same, like a real meeting point at this special areas. I hope you can understand and that you can picture this in your mind. And such meeting points develop to the historical prices in the past. At a certain price, a lot of buyers were willing to buy at such a support level, and this develops there. Going forward, when the price approaches that level, more buyers see this as a good opportunity to buy, which means the price rebounds there. So if you have a special support, and this is based on historical prices, and the price comes to this special point again, this meeting point, it was a meeting point in the past, and trading is really predictable. People, it's like a self-fulfilling prophecy. And if you have such a special point in the chart, you could see about the prices in the past that there were already a meeting point. You can imagine that would be happen again. And this is one of the reasons why very often the price jumps up there, up and down, up and down, up and down, but without a breakthrough. This means, okay, you have an exchange of supply and demand at this support or resistance price. But don't forget, it's just a price, this meeting point based on historical prices in the past. The same is true with resistance. A lot of sellers were willing to sell at this special point on the upper side based on the behavior resistance occurs, based on the past. And this is why resistance support works really, really good, and why they are really useful for any kind of special trading strategies. Of course, and there's a consequence, the current price rebounds there most of the time. And the point is, most of the time, of course, guys, not always. If it would happen always, we would have a 100% setup. But trading, guys, is based on probabilities. You don't have any guarantees or securities. Trading success comes by trade and money management. Strategies are responsible for 10% of your trading success. 90% is mindset, personal development. And this, to accept the inevitable thing that you don't have and you will never have a 100% setup. So trading with support and resistance is really successful if you are a really good trade and money management trader, or how should I say, risk management trader. Then you have a big chance to become successful with such things like support and resistance. So, and that's talking about this again, that you understand it really clear. We trade prices. You don't trade DAX or Dow or S&P. You trade the price of this underlyings or this special assets, of course. Please never forget that. You trade the price. I don't care about gold. I don't care about Dow Jones. Okay, today we have just like a little bit of crash today. Thanks God I'm short. And I was short in DAX. I made 10% today. And I have still open S&P 500 position with 5% in plus right now. Why? I saw the resistance on the upper side. And I could see that less people were willing to buy anymore. And a little bit later, we have a look at the chart, and then I can show you that what happened there. And there's a consequence. The price rebounds there. And if you don't have any buyers, then you will have more sellers. And if you have more sellers, the price drops down most of the time. Most of the times. Not, of course, not always. So let's see. Support and resistance are very helpful tools. Please, not the holy grail, understand this, please. Because the Q tell us about the price of the asset. And this is what you have to keep in your mind and to push in your mind like an impression. You trade the price, and the price is fair or unfair. And even you have more buyers, they are willing to pay that price, or you don't. And this is the summary of that you know that we use to trade the price and nothing else. And once you realize that, I promise you, there will become calm in your trading, because you are not longer interested on gold or S&P or something else, because you are concentrated and you're focused on making money with duplicable and successful strategies. So let's see some examples in the chart. In general, about support and resistance. So where is my, here we go. So, yeah, so here we go. Okay, here is this one. So as you can see, for example, let's see here, just only a little bit of support and resistance. So, and you can see this one. You can see this one. So first of all, that point, and I have to open my drawing program. Here we go. Where is it? Here we go, point to fix. Then I can show you a little bit better here right now. So here we go. So that was here the first price, historical price. And the lower, this one. So then you could see the price came down and started the next move again. And then the price could see, oh, there were resistance based on the past here, on the past. And you could see, okay, no more buyers anymore. The price were rejected there. And as a consequence, it rebounds there and goes to the lower side. How far? That's the other point. Look at this one. The price went down and we are able to see, oh, there was an earlier support. And the price tricked out the traders a little bit. It called a false breakout. But with no more sellers anymore there, the price rejected here on that point and goes up again. How far? Again, the price realized, okay, we had already some resistance here again. And you see it's like a ceiling, a glass ceiling. You can see there's a lot of space above and above, but it's just a ceiling. You cannot break through. And again, look at this one. The third time, the price rejected here again. So, and went down again to the last support here in this level area, and then price went up again. So, and the same you can see again, maybe here, this one. And here you can see, okay, first one, the price, here, this one, and here again, and here again, and here again. It doesn't happen always exactly. It's just an area, a special level. Level always has a little bit space on the upper, on the lower side. So, and here you can see again, on the lower side, support, 1, 2, 3, false breakout, fourth time, and this here's the breakthrough. But 1, 2, 3, 4, 5 times. And when the price came down at the second time, you could see, oh, and it's a little bit here again. Look at this one on here. And you could see, oh, there were a support in the past. The probability is really high that it will work again. And then you can make an order, you can make a trade there. How? I will show you a little bit in the next following slides. But this is how resist and support is working. Not always correctly or not always exactly. So maybe you can here, let's see in S&P 500, for example. So look at this one. This is a live. So what happened here? Look here. Just take a look here. This one you can see is just like a resist. And on the lower side, here you have the support. Can you see it here right now? Now, it was first time, second time, third time, fourth time. And you see, it's just like a resist. The price won't get up or won't trade up anymore. And then as a consequence, the price will rejected and rebounds there. And then you have more sellers than buyers. And the price went up to the next support zone. And here you can see this is a support zone again. Just have a look here. So 1, 2, 3. So it's very, very probability. It's just like a high probability. And it's very probably that the price will reject here the next time and will go up again. How far? I don't know. But you can use such situations in the higher time frame to trade in lower time frames. So take a look at 4-hourly chart. You can see the little bit clearly. Look at this one. You can see just here the resist on the upper side. So the first one, the second one, the third one, and the fourth one. And you can see at the second one, the price went down. And this situation, if you watch the 4-hourly chart, you can use maybe in 5-minute chart. That's the point why I always try to tell you and to explain you, please always, before you trade, have a look at the big picture. Where are you? The where in trading is so much more important than the how you can get in. How? Push the button, you are in, long or short. But your success or the success of your trade is indeed depending from your higher time frame, from where are you in the market. And it works 1, 2, 3 times. So here we go. And you could use this situation in 5-minute chart, for example. The next one again, and really big down shot here. And now this is, that's crash, like a little bit. It's not a crash, it's just only down. You have more sellers and sellers. The reason why, maybe it's today, it's like coronavirus or something else, or fear in the market, or maybe huge sellers there, because we know the markets are very overbought, and this is just like a consequence, no more, no less. But if you would have a look at the daily chart, it's just only a correction, no more, no less. So, but this is a working style. How does support and resistance work in the live chart? So, strategies. Now here we go to the very interesting point. You can use different strategies for support and resistance trading, like range trading, breakouts, and channels. Let's have a look at the theory of that. All of them are really profitable as long as you can manage your risk properly. This is the most important thing in trading. Cut your losses and let the winners run. Let's look just a little bit at each of these strategies. Range trading. You see it in a picture here. Range trading, a range occurs when an asset stays within its support and resistance lines. Resistance up, support down. Range trading means that you trade long at the lower support and short at the upper resistance. And as soon as you realize that the price won't fall below the previous low, the first red on the left side, you can see here. I will show you live here. Here, this is the first red, and you see some reversal patterns there in the chart. There, then you can trade long with a target on the upper side, the opposite direction here, or maybe you trail your stop by movement and let the market decide how much money you will get. And you can see the second time here is, and the price comes down the second time, you can see reversal bars again, and then you can trail up to the upper side, and you can trail your stop as long as the price will go up. And the same is true on the upper side. No higher prices there, here, and some reversal patterns trade short with the target on the lower side. And this is the theoretical meaning of range trading. You have a range and you can create that range if you have your first high and your first low, and you can see the price won't get up anymore to the upper or the lower side. Then you have the creation of a range, and you can use this situation maybe 1 or 2 times, sometimes more than that. This is like range trading. And as I explained, the target is always the opposite side of the range. Or in my opinion, I would do it like a trailing stop, because you cannot know if you will reach the upper side, but you see sometimes the price made a correction, and it's always better to trail your stop bar by bar and take that what the market will give you. So then talk about breakouts. A breakout occurs when a price breaks through a support or resistance line. You can see the green arrows here on the left side in the screen here. Breakouts mean that the support or resistance is not longer valid or strong enough to reject the price, if you talk a breakout, to the upper side through the ceiling, through the glass ceiling. And then you know about your price. There are no more enough sellers. The buyers are so much stronger. You have more buyers than sellers. That means always higher prices, higher prices, higher prices. And then more buyers come into the market. They can see, oh, there is a breakout. I want to do it too. I want to be a part of this breakout. And then they came from the sideline, or they come from the sideline, and then price will go up and up and up. And breakout trading means that you speculate exactly on this event, that the price will break through the ceiling or on the support zone through this support. And as soon as you see a closing price, and this is a really interesting message, as soon as you see a closing price above or below such a support or resistance line, you can trade in direction of that breakout. Closing prices. Guys, this is really interesting, and this is not a closing price here. This is not a closing price here. Here, that's a closing price. And you see the price went up. So as soon as you see the closing price, and here it's not important if you use normal Japanese candles or Heikin-ashi, don't care about that, doesn't matter. Wait for the close, and then you can trail in that direction. And the best approach, in only my private opinion, is to trail your stop bar by bar, or maybe you use you can use outside bars. Outside bars that you have a little bit more space for your chart. So like this one, for example, I can show you exactly here. So this is the breakout here. And then you can get into the market, you trail your stop here. And then you have inside bars. You don't trail your stop here. First of all, if you have the next close, then you can trail your stop, and then you are in profit. This is like breakout trading in theory, of course. If you have a trade channel or a trend channel, you do exactly the same. Sometimes it's just like a little correction, and sometimes it's a trend continuation channel. If you have such a wonderful increasing price, you can see this is like a little bit shaking correction. So a shaking correction to the lower side. And then at that moment, you have your second or your second rebound. You can draw your trend line there. And when you have your first support on the lower side, you can duplicate that, you can double it to the lower side, and then you have your channel. And always when the price rejected on the upper or the lower side, you can trade to the opposite direction. But you have to wait if you see the first or maybe the second rebound, then you can use the next ones, next rejected prices there, and can trade to the lower side. This is channel. It's the same. You would fix it to a range, and this is a channel. It's nothing else than a range, just only at like a correction or like maybe a movement to the upper side. It's similar to range trading. We are humans, guys, right? We need a little bit more security, safeties. Guarantees? No, you don't have any guarantees in market. So which indicator for your support, that you feel good, that you feel more comfortable, is useful? Maybe some indicators can be useful to identifying support and resistance levels. That's like divergences or overbought, oversold situations. So I use, most of the times I use MACD or the RSI. So let's see some examples here again. And this is just like, this is S&P 500, for example. And you can see, I draw it for you. First of all, can you see this one? This is a support zone here. You see, 1, 2, 3, 3 times. And each time the price rejected, rebounced, and went up. And at this time, this is really, really hot. This is an almost perfect strategy if you can see lower prices and you use MACD and you don't see a lower price in the in MACD, then you can see, oh, this is a really, really strong support. Even it is supported by some reversal bars there, and then look as a reaction of the price. Jesus, look at this one, what happened there. And then on the upper side, same. You see here, again, this great support. This is S&P 500. So first of all, 1, 2, 3. And then use MACD for example. And you have a 3-time divergence. Can you see it? Look at this one. Higher high, higher high. Lower high, lower high. And what happened? Wham, bam, price went down. This is a really successful trading strategy. But pay attention, guys, not always. And for this kind of not always, you have to be a perfect risk manager. So this is kind of overbought, oversold, but I use MACD, or you can RSI as well for this kind of divergences, and especially in higher time frames. You can use it in 5 minutes as well, if you want. So for example, let's see here. Here we go. First of all, you see this support zone. Support zone. So the candles, 1, 2, 3, then here again, 3, 5 candles, no more sellers there. It's just like a support zone. And then look at this one. You have a lower low, but in MACD, you have a higher low. And this means as a consequence, the price rejected and rebounds to the upper side. And this situation you can really use for maybe trailing stop, candle by candle, and let the market decide how much money you will get. Believe me, if you do it so, you can use it very, very wisely. So this is like how you can use RSI or indicators for identifying supports and resist levels. And if they are encouraged or supported by divergences, use it. Use it. It's not 100% strategy, but it's a high probability. And if you make movement trading and trail your stop candle by candle, you can make money there. But be humble and calm. Let the market decide how much money you will get. To figure out if an instrument is going to stay with the support or resistance level, or if they're going to break out or break through, you can use Japanese candles, patterns, or reversal bars, bullish, bearish, engulfing, you know all that. Or I use Heikin Ashi. I love it because I like to see by balanced candles here. So that's signs of strong support or resistance. So you see like a hammer on the lower side, or it's called a hanging man, or you can bullish engulfing or bearish engulfing. That's kind of rebounding signs there, or rebound signs, whatever you use there. Or in Heikin Ashi, it's so much more easy. You can, in the previous slide, you saw the specific candlestick patterns. Here, it's balanced candles. And you can see such balanced candles at a support or resist level. It's a really clear sign. There is enough power to reject the price again, which means the range remains valid. If you see such candles on the lower or the upper side, then you can see, okay, no more buyers on the upper side, no more sellers on the lower side. And this is really, really interesting. And there is a really unmistakable sign to figure out if the support or resistance will hold strong or if the price will break through. Listen to it, guys. As long as you don't have a closing price, that's the secret word, the closing price above or below a support or resistance, you can assume that this level will hold. If you can see a closing price above or below, then this is a clear sign for a breakout. So let's have a look here again. So first of all, let's use this. This just want to say, just an example. So you see here, this is like range. You can see here, first of all, no close, no close, no close. Here, no close, no closes there, but there you have a close. But you see, this is a really good example that it works not always, just the correction, but you can maybe extend this one a little bit. Again, this little bit false breakout. You could see it works not always, but again, next closing, and then the price won't go up. Or you can use it on the lower side again. See? Here, for example, no close. Here was the close, and price went up again. So, and this example, you can use it in DAX or in something else, whatever you want. You can here scroll in a little bit, and we can use it in normal candlesticks here as well. So, let's see, maybe here. Again, no close, no close. Range. No close, no close, no really close, but here was the close, and then down. And this is a secret. This is the really secret. Be patient, guys. Be patient and your chance will come. And the secret is really the closing price. Then you have a high probability that the market will break out, will make a breakout. And if you, as long as you don't have any closes, the signs are very strong that you will have, that this level will hold. Okay, guys, let's make a little bit conclusion. Support and resistance are well known and used by a lot of traders. Risk manager is the secret. Working with support and resistance strategies can be very successful, of course. There are a number of support and resistance trading strategies, breakouts, ranges, and channels. Be careful about the false breakouts. Closing is the secret word. You can use MACD and RSI for helpful indicators, and then at least learn to interpret your candles and you will get unmistakable signs for possible breakouts. I hope, guys, you learned a little bit about that. If you want to, if you have any questions, or if you want to follow my trading approach and ideas from Paul, Jens, and me, then join our exclusive trading spotlight community on tradersyard.com. You can see it here in the slide. And then follow our group under Office. You can see it here again. It's not easy, tradersyard.com. Then switch to, it's priceless, of course, priceless. Then Office, and then Trading Spotlight Community. Then join us and send a friendship request, and then my colleagues from Admiral will join you to this wonderful group, and you can see how we use all that what we teach you in our real trading. This week is a little bit an exception because you have to watch and hear me again. I'm really sorry for that. But on Wednesday, I am here again with the next topic, how to build powerful habits for trading, including the importance of powerful habits, unhealthy and healthy habits, and how you can build them that you can be successful. Wednesday, same time, 3 o'clock German time, Wednesday, 26th of February. And I will be really happy and I'm feeling pleasured and honored if you be a part of this again. And with this in our mind, I wish you a wonderful Monday, Tuesday, and I hope we will see each other on Wednesday. Every other question sent to Admiral Markets and with YouTube, Facebook, or on by mail. I wish you a wonderful day. Thank you for joining this webinar. Be careful about your thoughts. You know they're the beginning of your actions. See you. Bye-bye.